the 10th of February. It's weekly claims in about 10 minutes, and more importantly, it's probably the data of the week. It's US CPI, US Consumer Price Index, expected to rise come down this month to 0.4 of 1% from 0.5 of 1%. And the more important core also expected to slip 0.1 to 0.5 from 0.6. More importantly, the headline, which will grab the financial press and other headlines in news outlets tonight, will be obviously the annualized rate, which is expected to actually rise to 7.3% from 7% last time. So remember, inflation, it's top of the topic for all the central banks now. That's why we're talking about interest rate hikes, the end of quantitative easing, the starting of quantitative tightening. Excuse my language. I realize I haven't shared my screen, have I? What am I doing? I'll come to that in a minute. I'll bring the chart up in a minute. But so what we have is, markets basically all week have been in anticipation of this key data. So see what that comes out in literally 5 minutes now. So where are we? Well, let me just share my screen. Hang on a minute. Share my screen. Let's bring up my MT4 platform. There we are. Share all of that. Let's show the whole screen. So I'll put my. I can put my. There we are. I can put the calendar on there as well. Let me just actually show you the calendar. So this is the calendar that we're expecting today. So main number is the obviously we've got the jobless claims, the continuing claims, been a big topic of discussion over the last obviously 18 months, 2 years of the pandemic, come down very significantly. This 230,000 expected today is more or less normal economic cycle targets. In fact, it's a bit lower than normal economic cycle targets. So we'll see what that number comes out. So the headline is what everybody's waiting for is this number here. This headline year-on-year number for inflation at 7.3%, up from 7% last month. So again, see obviously what the that's that core number, the red here, the most significant one for the month itself. So on the low, Danish, we'll have a look at. We'll certainly have a look at gold. We'll certainly have a look at cable and euro yen as well, and euro dollar as well when we get going. In fact, I'll bring those charts up now if you like. I don't know again, Uma, what time frame you're looking at, my friend, but this is the calendar we'll have a look at in a minute. So euro. Well, let's have a look at the wider dollar itself. Dollar here. This is the dollar index, guys, on a daily time frame. So you can see we've moved down from the end of January into February. We've found some sort of support around this 95.50 zone. This is where we are now the last few days, waiting for really the inflation number to come through. So dollar is sort of just biding time, as is most Forex markets. We've had big moves, some significant moves in stock markets this week as earnings have come out. Some big moves last night. Disney was up. Uber was up after hours significantly. Twitter have just announced earnings this morning. They were up pre-market as well, but we'll come to that obviously later on. So first, I'll have a look at the. Tell you what, Una, I'll come back to this. Your euro and your euro yen. Let's just have a look at it before the data comes out here. So we've got. Where are we? We've got euro sort of ticking up a bit today. This is the 1 hour chart. This is a little trend line from Tuesday's low here when we punched under 114, and we sort of been angling up. So we've got a bit of a rising trend line here. We've got a bit of a higher high, but we're topping out here. See on this 1 hour chart from Tuesday around this 114.40 level. Been through it again a couple of times today. So that's our. We need to break through this level. We're going to then move up and test this level here from Monday, which took us to up here at 114 for, what's that, 54, 55. So that's what we're looking for at the moment. And this is our down trend line. We're going to test this. This is currently running around 114.30. So it's sort of down in the current hour, but up to the upside. Your euro yen pair, where's my euro yen gone? euro yen here. Again, this is on the 1 hour time. I've zoomed in a wee bit more, but let's come out of it. Again, another one that's been moving up from this this move we had down earlier in the week at around about 131. We went to test 131.40 was our low here. We've been through this 132.35, which is from, if I remember rightly, that's from, yeah, that's that big up leg we'd had for this congestion area back at the beginning of November. So this is very well bid. Obviously, a strong day a couple of last week when the ECB surprised. So this continues to move to the upside here on the 1 hour chart. Big significant move through that key level earlier. So we're coming back down to it so far ahead of the data. So let's just have a look at see if the data's come out. Where am I? Look at the data's run through. So there we go. We got hotter inflation. Now that is just going to add to the. Can you see that, guys? 7.5%. That's the headline number that's going to be grab attention. The core is also at 6%. So that's hotter than expected. So hotter CPI out of the US. The jobs have tipped back up on a long-term basis, 1.62 million, and the ongoing or the initial claims at 223,000, so better than last time, better than last week's revision at 239,000. So the jobs market continues to get tighter. Costs, inflation is going up, possibly because of that big hot earnings number we had. Remember on non-farm payroll on Friday. So this is just adding to that the noise of how quickly, how fast, and how far the Fed is going to go. That's the main crux that's driving markets at the moment. So clearly they will move interest rates up in their March meeting. The story is, will they go with the 50 basis points rise many are starting to talk about now? Only a few months ago, they talked about no rate hikes in March at all, later in the year, but all now, 4, 5, 6 potential moves. So let's have a look how the Euros moved on the data. So clearly dollar positive, pushing the Fed with that higher, hotter CPI number to perhaps move more aggressively. So there's three combinations. It's the level they're going to move them to, it's the speed of the increase, and that final terminal rate, the high rate of the cycle, whether it gets to 2.75 or even 3%, some have talked about. So this is a dollar positive CPI read. Remember, it's the data of the week. So dollar index here on the 1 hourly chart. Look at this big spike here, back out of this range at 95.50. We've been all week basically waiting for this number. So we're ticking up. I've got a line here at 95.77 for some reason. I don't know why, but it's usually for a good reason. And it's at a support on an end of day basis, taking us back to February the 2nd. So 95.77 first target today. We break, see here, how that clearly breaking out that range of the 1 hour target, and then 96 itself. So dollar bid on that the CPI data, but also the ongoing claim, the initial claims in line with it, or in fact better than expectations at 223,000. Ongoing claims is a bit worse at 1.621 million from 1.615. And the initial average again keeps ticking down. So the 4-week average down to 253,000. That's a good 4-week average. So that's around about normal for regardless of the pandemic. So that's a good move. But say the monthly number actually ticked up rather than ticking down at 0.6 of 1%. The core went back up to 0.6 of 1% from 0.5, stayed at 0.6 of 1%. The revised headline was moved up to 0.6 from 0.5. And I say the one that's going to grab the details, you're going to see in lots of news headlines, 7.5% annualized US CPI, Consumer Price Index, Consumer Price Inflation. Caveat remains that obviously the Fed are more interested, or not more interested, but they take view of wider measure of inflation, so the CPE number as well. But overall, that's a dollar positive dollar data dump out of the United States. So, as we might expect, dollar index up, euro down significantly, having breached that key support line we'd had from Tuesday, breached that, and now back under 114. So if we go back up to the 4-hour time frame, again, let's see that sideways we've had all week, and now back under 114. So a close over 114 today will be relatively positive given that data dump. Obviously, we've rallied quite significantly here during the latter half of January into the beginning of February here from lows down here at 111.35. So next big line in the sand is obviously 113 itself, but 114 very much in play today, and on the down leg. So really exaggerate here on we've got the 5-minute chart, huge move down through the key 114, and it's a dollar positive data dump. So let's get to your request. So that Onomofo was asking about euro and euro yen. So let's have a look at euro yen. Euro probably has taken a bit of a hit. Yen was probably also taking a hit on that data, to be honest. But that's whereas the at 1 hour chart, I don't know what time frame you're trading that one, but as you can see on this one, our support line from earlier in the week for this pair on the 1 hour is very much intact. So that should be a bit lower than that. It's a badly drawn trend line. Oh no. That's draws of trend lines. I don't know why it needs to be down there, really. There we go. So that's still bid. 132.35 has been breached at the moment. So immediate support for euro yen sits at 132.15. Our trend line here is 131.99. So right bang on the 132 level itself. So that's our support. We've already topped out for the day. Well, it looks like we may have topped out for the day earlier, and that sits at 132.60, 132.59 to 132.60 with a smidge of pips. So first test will be this 20-hour moving average. First time we would have tested it today if we get down to it at the moment, 132.16, but certainly a dollar positive dump. So just excuse me a minute. So everything else, one would assume, was come under pressure. Then Danish is asking about gold, one of our favourite, in fact, our most favourite asset that we offer. Lots and lots and lots of gold traders here at Hot Forex. So again, another one. This is the hour chart, Danish. As you can see, we've been trending higher all week. So our lows have got higher, our highs have got higher each day. And earlier today, we topped out around 1835.98, so 1836, which is a significant move for gold this week, but we've given up a lot of it. So the key levels for me on the higher time frame for gold, I've been saying for a long time, has been 1800 itself all the way down here now. This is the daily time frame on our gold chart, guys. 1800 itself, 1815, and then 1830. So we went through, we've had a strong day, we've had a strong week, even though yields have gone up. Remember, gold is non-yielding, so it tends to weaken as treasuries weaken. But obviously the worry in the world, it's perhaps seen a bit of a bid. Some buys of the actual bullion as well, by all accounts this week. So anyway, the gold price has ticked up during February, topping out this morning at 1836, but coming down intraday quite significantly on the data out of the US. So that's a big break of not only the 20-hour moving average. This blue line here is the I don't think you can see it's the 50-hour moving average. So it's breached that very significantly. Last time we did that, reversed very quickly as well, and that was back last Friday, and we all know what last Friday was. That was NFP day. So there's the power of NFP, the NFP hour here last Friday, and this is the next big piece of economic data the market's been waiting for at the United States, the CPI. At the moment, not significant as the non-farm payroll blockbuster number, but certainly it's moved the gold market down. We're currently trading at 1826. Big support sits at 1815. Lots of fresh air before we get to that today. But that's looking relatively weak. Looks like it's rolled over. If you wanted to trade that one, there's your little trend line down today. So 1827.70 is where we trade at the moment. And first support is this 50-hour moving average, which sits at 1829.06, Dinesh. And we're currently under that at 1827.70. So that's moving and rolled over. No doubt we'll come back to gold in a little while. Pound, dollar, direction of the cable, says Millie. Let's have a look at cable, how cable's reacted. Again, cable here on the daily time frame. Again, another one that we saw earlier. Sideways action this week ahead of CPI. Down day last Friday because of non-farm payroll. And again, very not surprised to see a big shakeout for cable. So 135.87 from yesterday. Didn't get there today. Our high today is stalled around this 135.75 level here, this line here. And currently, this hour candle is taken out 1, 2, 3, 4, 5 hours. So big engulfing candle. Obviously, the main news of the day, dollar positive. Cable was whacked as well. Interestingly, it went down to its 200-hour moving average. So that's a key support area. See how that's this low from this morning and yesterday. So 200-hour here is our next key support at 135.32 for cable traders. Millie, if you're trading this on a daily or on an intraday basis, let's zoom that in. Obviously, that's going to have quite a significant impact on the daily candle. That's the daily candle here, sort of sideways wick, so weakening. The daily, if I zoom this up, the daily 20-day moving average is that pink line on there, Millie, which sits at 135.22. So round about the 200-hour one here, that's 135, 135.32. So 135.32 and 135.22, key 10-pip support region for cable today going forward. So dollar, pound down as well. Very clear movements on that, very positive, dollar positive data that's come out. Okay. Tulu, if the news is good, then dollar will regain strength. Yeah, well, it depends what you argue. Your average American wouldn't say that's good news. That's prices going up. It's not good news for the administration. Biden's under very much the economic cosh. He hasn't got his Build Back Better program through yet. His ratings are as bad as Trump's were at one point, at 41%. So he needs some good news. They tried to preempt a surprise in non-farm payroll last Friday. In fact, it's a surprise to the upside. They were trying to prevent worry to the downside. We're expecting a big negative number. It was actually positive, but that's just added to the pressure on inflation because people with jobs, earnings are going up because companies are having to pay more, and that's just adding to the cycle of inflation and costs going up. We've got huge energy crisis in Europe. Big worries, obviously, about the Russian-Ukraine situation, added to that potentially. Big hikes in energy prices, but in the UK was announced last week, a 50% rise in energy prices. Some people on fixed bills going up 100%. So some big squeezes, certainly in the UK and parts of Europe as well as obviously in the United States. It's the costs we're looking at today as well. So inflation concerning and exercising all the minds of the major central banks. So it's been a dollar positive data. Subaru, hopefully you are still here, my friends. Abu Bakr, about gold. I say gold has weakened because of the stronger dollar. Well, let's just have a look at it as your name's up there and you're asking about gold. Well, gold. There we go. So it's that's interesting, isn't it? It's weakened and now it's actually it's got back to where it is. That's very, very interesting. So very volatile hour for gold. So gold, that would suggest that gold might remain still on the bid here. So so perhaps mixed news. How the news has been interpreted, that CPI number and the jobs, but I'd say that as very much dollar positive. Claims to say better than expected, inflation hotter than expected, quite significantly, a 0.51% annualized rise. So lots going on here in the gold market, but intraday, let's break this downtrend here. If we're going to go back up, and 1835.98 was a hot high today. 1830 is a key end of day support, so we seem to find some support at 1830 and then 1815 on an intraday basis, but that's our intraday support areas here, 1829 and 1827.70 as well. Abu Bakr, no doubt we'll come back to gold again, so hope you're all staying well. Cooper, hello my friend, not heard from you for a while, hope you're well, hope you're staying safe. Yen and euro, please. And thank you all. Thank you for being here. Dollar yen would probably had a bid, and it continues to bid. So this is probably one of the better moves because the dollar's being bid against the weaker yen. As you can see here, this is a daily time frame again, but it's continued its bid. So we're back through 116. Obviously, the next high is our actually it's gone above 116.30, didn't it? Intraday, we went to 116.34. So that's the key high from the 2021 high on the second day of trading for 2021. So it's a January high, and there's obviously an annual high as well. So obviously, it's only very, very early days into the year, but these sort of things stick in traders' minds. The year high, the 2021 high, was 16.34, and here we are at 16.10 at the moment. So dollar yen remains bid, and it has been bid here on this trend following strategy here since the the 3rd of February. So it's been long here, just below 115, and whatever that would be like 200 pips to the good, 1140 points at the moment, so 114 pips bid on yen on an end of day basis. Intraday, big move in this hour, obviously back over 116, breaking out of the again, another one that's sort of been range bound, waiting for the news, but again biased to the upside, dollar yen, because of the weaker yen, to be honest. So up through 116, 116.10 at the moment, so that's definitely bid. Euro, we talked about weakening quite substantially. It's bounced a bit, like we saw with the gold here. This is the 5-minute euro chart, but under 114, so 114, very much a line in the sand now, Cooper, today. The 4-hour time frame, as you see, lots of fresh air, down to 113, went up very quickly last week on the post non-farm payroll. So equally could come down quite quickly as well, but that's a 4-hour. The 1-hour big candle currently. Assume it's in a bit. As you can see, the 1-hour sideways this week, waiting, but again, lots of fresh air to the downside. So 114 needs to hold for euro dollar bulls, my friends. Next is Doug. Hello, Doug. Could we also squeeze in a look at pound yen? I love the guppy, Doug. It moves an awful lot of pips. And what are we looking at this high? What are we looking at this high? Elbow cough yourself, my friend, Addy, my friend. I don't know what the elbow cough is all about, but we'll talk about that later if you're not right. Where are we? Pound yen. Let's have a look. Let's have a look. Pound yen. Where's it gone? Where's it gone? Where's my guppy's disappeared? Oh, dearie me. You think he'd be organised, won't you, before he came on? There we are. So, guppy bouncing. Simply another one that's. Let's have a look. There we go. That's our 1-hour sort of very iffy trend line from perhaps Addy was coughing about. Early in the week. So we are up at the moment. So down here at 155.25, 155 itself here. I knew it was down here earlier in the week. 155. Here we are at 157.10. So big 200 pip move, 2,000 point move thus far. So where are we going to go? Asks Doug for guppy. Well, for me, it's just broken long, hasn't it? So that was a top here on Tuesday. New top was breached today, obviously on this news. So that there become our support zones coming back. So we got support at 156.75. We've got also the top from Tuesday, which comes in at 156.70, which happens to coincide with our trend line. It's not magic, this, ladies and gentlemen. It's what it happens. And we're currently trading at 157. So obviously 157, the round number, is the next. Can we hold that? Remember, this pair can be particularly volatile, so be very careful. It's known as the Widowmaker for good reason in Japan and in London as well, and has lots of other acronyms as well. All of them not too complimentary because it moves around a lot, but lots of pips on offer for pound yen trade. So 157.00, big support now. So let's have a look. So that's the hourly chart, the 4-hourly chart. Just, you know, that's bid all the way, isn't it? Is that our Tuesday low, or this week low? But you can see going back to the beginning of February here, we were back at 153. So the 4-hour trader has been, you know, he's been long all this time, hasn't he? So he's long and he's long. Again, badly drawn trend line. That shouldn't be under those, shouldn't be breaking those. Oh, so I'll move it now. Breaking those candles. Never draw a trend line through the body of a candle, ladies and gentlemen, like I've just done there. That's but I'll let myself off because I'm doing it live. So grab it. I won't grab it. Won't move. Oh, I can't move the horizontal line. Won't let me move the trend line. Anyway, you can see that that's bid 157. Been rallying all month basically. Go to the daily. Thank you very much. And again, end of day traders using this strategy would have been short here into the end of January, gone long here right at the beginning of February, and we've been long here as an end of day basis from 155 again. I think I said this earlier, didn't I? I've looked at dollar. Hang on, this is the wrong one. No, this is 155 as well. Sorry, I'm getting all mixed up. So 155.00. Here we are at 157, 200, 2,000 points, 200 pips to the upside. And this is where I guess this is Doug's question. And what are we looking at this high point? So this, Doug, here, zoom this up, or leave it as it is actually. So where are we? 157. 1, 2, 3, 4, 5, 6, 7, 8 days we struggled to break over, and we didn't really close over it, did we? For those 8 days, there was only one day where we closed above 157, or 2 days. So this is a key resistance. So 8 days it took to break it last time. So this is our first attempt at 157. One would expect a bit of resistance here and intraday to move down. So what you'd want to be looking at here is some sort of, if you're going to trade this intraday, you might be looking at some key resistance here. So the 50, if you go down to the 15-minute candle, for instance, look, we're looking for some pin bars to suggest weakness, but it hasn't happened, has it yet? So that's still hanging on. So 157, absolutely key to the further development of cable from, not cable, pound yen from here. So that's the daily. We're at a key resistance that takes us back to the beginning of the year, another year high. So let's just pencil in where we got to at the beginning of January. At the beginning of January, twice we got as high as 157.75. So there's still 75 pips potential in that. Remember, this is just intraday basis, but what's the weekly time frame? Let's go up another step. So what's our weekly time frame telling us? But look at see, and this is Doug's point, I guess. That 157 is not only key on the daily from those 8 days we saw beginning of January, but this is our weekly time frame. And we've still got, we can't make a judgment on today, on this week's candle, because there's still today and tomorrow to run, obviously. But look what 157 is. It's key from January, as we've just seen, second week of January. We look back to the left again, it takes us back to, all the way back to October. And again, see how we couldn't close the week over 157. So this is a significant level for the guppy, for pound yen. But here on the weekly time, and let's look at the other indicators, what they're telling us. Well, there's still an uptick in the week. This is the weekly MACD, remember, the signal line's starting to turn up. RSI is still, it's not great, but it's a weekly, remember, 3 positive weeks so far to the upside. So it's still biased very much to the upside. We come down the daily, we'll see RSI, even at the high of 14 levels, is still yet to be into the overbought area. So we've still got an uptick. We've still got positive signal line. It's flattening out, admittedly, but we've been over the zero line for, on the MACD here since the all year, basically. So it's been positive, although we've trimmed down and trimmed up. So we've run up, run down. So we're still, you know, okay sort of histogram lines as well. So that's all still quite positive. So, but 130, you know, would you buy at this level? I'd want to see a big clear break of 157, and there's only 75 pips more in the daily time, but still a potential target to the upside. So big, thick resistance. There may be some profit taking going on at this level, Doug, but certainly it's bid. And as you say, the higher time frames are telling us that this is a key resistance area, which I guess you've already checked out anyway. So interesting to see where we finish tomorrow. But it's certainly been a positive last. This is just a demo account, by the way, guys. It's not a live MT5 account, so it's just for on my workstation here. So those things pop up all the time. So bear with me. So, Doug, I hope that's answered your question. Addy, you deserve another display to the world. Cough, cough as well, myself. Adnan, how are you, my friend? Good afternoon to you. I hope your daughter's feeling better today. Future, again, gold. Gold, Future's asking about gold. Olarunza is also asking about gold. Gold has weakened. Let's have a look at what's, while we've been away, let's have a look. Because remember, we weakened initially, and then it was looking like a huge pinball, wasn't it, when we went the gold chart? Yeah, so it's still biased to the downside in this hour. Remember, the data is 25 minutes ago. Huge, spike. We tested. Interestingly, we took out. I wonder what caused that. Does anybody know? We went over the daily high in this current. Let's look when that happened. 15 minutes. It must have been initially as the news. No, it was what was that? It was 10 minutes after the news where we tested the daily high, and then we come back down. So, still, this is 15-minute now. So still biased to the downside. 1830 is absolutely key today, Future, for this uptick that we've had. Generally against the news, because yields have been high. High inflation. It's a non-yielding asset, gold as well. Remember, so it costs you to have it in your vault. So not necessarily positive for gold, but obviously people buy it as a hedge as well. But there's always talk about people are holding cryptos now as hedges against inflation, but still that is the clear way. But as a technical trader on an end of day basis, this went long here, breach of 1815 earlier in the week on Monday, following the MFP on Friday. So that would still be long. Support 20-day is back to and then is now the 20-day moving average is now above the 1815 key resistance, which is now a support area. So we need to hold as an end of day trade. I'd be looking for 1830 to hold today and tomorrow to show some sort of strength in the gold market still. If that doesn't happen, we could easily quite quickly test 1815 next week or even tomorrow. So watch. Gold Future, same with you, Tilu, regarding gold. Gold is damn too volatile. Stay away from it during strong news. Well, fair comment. Again, guys, you trade what suits you, what fits your personality. If, like Tulu here is saying, gold is too damn volatile, if it doesn't fit his psychology or his psychology, excuse me, he says stay away from it. Avoid trading the news. Many people love to trade the news, waiting for the news. Many people have been waiting for this big news announcement, for these big pit moves or potential, but obviously you can get caught on the wrong side of some news announcements. Lots of different ways of trading the news. You fade the news, you go with the news. Has it broken the trend? At the moment, here, as if you're an end of day trader, obviously this is the big news announcement of the week. But so far, as a gold trader, for instance, so obviously still a lot of the day to go, but it's still bid. It's a smaller candle at the moment, but we can't make anything we can't make any decision on that as a trader, because our last day was yesterday, and that was positive, and we've been long. Well, I'm saying we, as an end of day trader, you would have been using this strategy. I'm saying you would have been long certainly from Tuesday, if not before. But again, it's just how you trade and what's on this particular setup. Okay. Cooper is asking about daily and 1 hour. That was about. Did I do that, Cooper? If I didn't, put another number in, and we'll do it again, my friend. Okay, Mohammed. Good afternoon, Mohammed. Hope you're well. Staying safe. Yeah, absolutely. Wait, damned hot, my friend. Damned hot, Addy. It's hotter than expected, wasn't it? 0.6 of 1%. Indeed, and the overall was good. Jason, good morning. Jason, good morning. I hope you're happy with the pound yen we talked about before. If not, stick another message in. We'll have a look at it. Lenny, the growth is very low. How the money can increase? I'm not quite sure what you mean, Lenny. Growth of what is very low? How to withdraw? You're talking about You're talking about your hot Forex account, Lenny. I don't know, Lenny. It's very simple to withdraw. You click the withdraw button, and however you deposit it, it goes back. If you're a first-time deposit, it goes back to that way of deposit. Lenny, come on to hotforex.com, the website, and the support guys will help you out. The little message box should pop up, and chat to them, and they'll sort you out. Okay, if not, get back in touch with me. Okay, Quasi, pound yen. I think we've done quite pound yen to the death. It's a big resistance at that 157 weekly, daily, but it's in a big run up. I'm guessing you saw what we were talking about. Oh, it's not here, is it? So. Why is more? There it is. Oh no, it's the wrong pound yen. I want that one. Yeah. So here, 150. Where we are now, very significant. This is the weekly quasi. Big resistance at 157. Look at this weekly one. That was our high for January. Remember, 157.75 is our high for the year, back in the second, third trading day of January. So we're over that. So 157.00, big significant level, which we breached currently, and it remains bid to the upside on the higher time frame. Certainly today, testing those highs. NAS 100, the NASDAQ 100 had a blockbuster day yesterday. Mr. Business, I like your handle, Mr. Business. Mr. Business, I like that. It's made my day, Mr. Business, Mr. Business. Mr. Business is trading in NASDAQ. Let's have a look for Mr. Business. 2% rise yesterday, best of the American markets yesterday. Why didn't I stop? There it is. USA 100 here. This is our CFD. So dollars got a hit to the upside, and consequently stocks have got a hit to the downside, particularly the Nasdaq. Why Nasdaq? Well, the Nasdaq is obviously technology stocks, technology growth stocks. Benefited most significantly from the rally, this 10, 12, 13-year rally in the equity markets. But their future profits, future expectations are much more vulnerable to rate hikes, interest rate hikes, because it's less tangible, their profits. Unlike like a telecoms company or some other utility where their income is a bit much more predictable, much slower growth. So that's why these value stocks, as they call it, benefited from this worry in the rally in yields and the expectation of interest rates going up. So as yields go up on government treasuries, the price, or as the price goes down, the yield goes up to attract more people to invest in it. So very low risk investment. But as inflation goes up, that obviously erodes your cash holdings as well. So and expectations for riskier assets like tech, like the members of the Nasdaq. So anyway, so Nasdaq, significant break of the psychological 15,000 level today. So obviously intraday. So yesterday, nice strong 2% rally, but unfortunately, as you can see, most of yesterday's gains has been wiped out so far. Obviously, we're still 25 minutes before the cash open, Mr. Business. So intraday, that's definitely a sell trigger here with this big down arrow here on this 1 hour time frame, because it's broken. Well, his strategy is that one there, but it's also broken the blue line, which is the 50-hour moving average. I don't know if you can see it on these black charts, black background charts, and the 200-hour moving average has also been broken. The first time we've been under that since Tuesday, and that wasn't for, well, it was for all of Tuesday, wasn't it? We rallied into close, strong Wednesday. We're shaken out on Wednesday. If we go up to the daily time frame, this gets a bit messy, but as you can see, we've struggled to get back over our 200-day moving average here on the Nasdaq. That's the major resistance, just over 15,000 at 15,130. major resistance. So we've got the psychological 15,000, then 15,130 where the 200-day sits, and support. Well, I'm saying there isn't any support. The initial support this week has been at 14,592. So that's, if we close above that tomorrow on Friday, that's it's still a positive week. 14,600, say, let's round it up a wee bit. But obviously with this big move down here, we had the end of January at 14,000. So that's the next big level to the downside. So NASDAQ needs to break over 15,000 and hold, and needs to break this 200-day moving average at 15,100, and then at least post a February high for at 15,269. It's the worst performing of the major equities, and at the moment we're down today on that news, obviously down in this hour, having slid sideways and ahead of the open. The 4-hour also rolling over. You see that? Yes, that's just triggered on the close of that candle at 4 o'clock to the downside. So 4-hour traders would have taken that short from this nice rally up we'd had over 15,000. We topped yesterday and this morning at 15,070, and then that's taken that short there. So 4-hour traders, next level to look at is 14,540, and then below that is that candle there, which takes us to 14,425. Excuse me, Mr. Business. Hope that's answered your question. What is going on here? Says Tulu. Here, we're talking markets. We're talking results, responses from the economic news out of the United States of a much hotter reading for inflation and a strong initial claims, new jobs, people claiming unemployment for the first time in the United States. So strong economic data out of the United States today has caused a big move in the dollar on expectations that will put more pressure on the Fed to act, perhaps not necessarily more quickly, but there might be move higher. Might be active. Yeah, it's the speed of. Let me get that right. It's the speed of their reaction. It's how far they go, how high they move their interest rates, and that could then have obviously has a knock-on effect to how far what they call the terminal rate is for interest rates over the longer term, over the 18 months, 2 year sort of cycle, 3-year cycle. So there we go. Amise, this is what I like. It's not asking a particular asset on a particular time frame. So Amise is asking the euro on a 4-hour time frame. So let's have a look. So euro here on the 1 hour has been sideways all week, and we go up one to the 4-hour. You can see a strong rally for February for euro. As the dollar, well, it's not the dollar's weakened. The euro's spiked up on the hawkishness from the ECB. Well, particularly Mrs. Lagarde's press conference last Thursday. Not so much the statement. The statement was quite dovish, but she was quite hawkish in her outlook and our comments later on. So anyway, 4-hour has just breached the 20 period moving average. So this sideways action we've had this week following the big bullishness would trigger, that would suggest that's going short. But really for me, the tentative entry, simply because, let's zoom this up, we've been in this channel. So we need to, you would like to technically, that has triggered short, okay, on this strategy. Why do I say that? Because it's a big engulfing candle and it's closed significantly below the 20 period moving average, but it was on the most significant piece of news this week. This is what happened last week on the most significant piece of news, the non-farm payroll being much better. So we rallied all the way from 113 to 114.75, wasn't it, earlier on Friday. Sorry, where am I? So this is. In fact, it was Thursday, wasn't it? It's Friday, and then we continued to rally through. So we're moving down at the moment. So that move up has sort of run out of steam. So 114. If we close above 114, that's positive for euro dollar. closing below 114, that's negative, but that's already negative, and we're down again in this current new candle, which just started at 4 o'clock, just 10 minutes ago, this candle's for. So that's bias negative. Okay, what I wouldn't say though is to get too excited about it, because we've been in this big channel following the upside. So really, that's the next support level there, that the other 4-hour candles here from last week, which takes us down to 113.64. So this could easily, well, not easily as well, but could quite likely test, shall we say, or there's quite a potential significant probability over the next couple of candles for this to test 113.64, just for the fact that we moved up so aggressively in 2 big candles. Things can move down just as quickly, if not more quickly. So that's all biased to the downside, Amis, my friend. So I'd be looking certainly as a 4. And it's too early to tell at the moment, but we've certainly broken out of that channel, haven't we? If by 8 o'clock, when this current 4-hour candle completes, we're back over 114, sort of here somewhere, 114.20, 114.20, 30, something like that. That's relatively positive. We could easily then start to move back to the upside, back through 114.40 to test this 114.75 area. So yeah, the news has certainly moved it, but see how it moved last week on the ECB and other data last week. Lots of data last week. It's not much this week except for this CPI data. Captain Jerome asking about the Kiwi. Let me have a quick sip. So Kiwi, again, another one just like those other dollar crosses we were looking at earlier. Excuse me. But bias to the upside all week. Again, this is what we've done this with the others, didn't we? The other key dollar crosses. So dollar sort of weakening all week, hasn't it? There we go. That's our again badly drawn trend line. Don't follow my trend line drawings. Shocking. But anyway, so we higher highs, higher lows. That's a trend on your trend, and then all of a sudden it's wiped out as the big news appears. So we got higher today than yesterday. So let's look at our levels. So yesterday's high was through here at 66.90. So therefore, dipped a wee bit. You can imagine what's coming, can't you? We've breached and got to 0.6700. We went as high as 0.6703, and then we've waited for the news. The news has come out. It's been dollar positive, and bang, we've gone lower. So we broke our trend line. We broke under our moving averages. That's moving down now. Our first support is here at 66.50. So that's what you're going to be looking at today, Captain. 66.50. Then 66.25 takes us down here. That takes us all the way back to Tuesday, and then 66 itself. So you've got three significant both technical and psychological levels there: 66.50, 66.25, and 66.00 for the Kiwi. Whether we'll move all that way into the close of the week tomorrow, who knows? We obviously still got the live US session and all of tomorrow as well. But that's to the downside. Obviously, to the upside is yesterday's high, which was 66.90, and today's high at 67.03 to the upside. So again, dollar positive data. So there we go, Captain. I don't know if you want time frame you're trading that. Let's just see if anybody's come in. No, they haven't. Right, have I got questions? Yes, I've got guys on Facebook. I have got guys on Facebook. I have what's going on here, he said, didn't he? Quasi, I answered your question, didn't I? Amis, I answered your question in 4 hour. Next, Vored, Alexander. I don't know what that means. Does that mean something? Have I missed something, Vored, Alexander? Vored. Oh, sorry. I know the market will finally settle in the next few hours, and there will be clarity of trend, says Tulu. Honestly, there have been low volume this week. Indeed, it's because of, there's not much data, there's not much economic data driving things. We've got the geopolitical situation in the background. Russia, Ukraine, basically, the Russian Belarus exercises started today. The Russians have said their soldiers are going to go back to their Russian bases. They're not going to go to the Ukrainian border. We'll see what happens. Macron says that he got a President Macron from France met Putin yesterday, went to Kiev. Well, he met Putin earlier in the week, went to Kiev yesterday. He stated yesterday that Putin had agreed not to escalate things in Ukraine. The Russians quickly said that wasn't the case, so tensions are still quite high. Prime Minister Johnson in the UK has seen NATO today. The foreign minister from the UK is seeing her foreign minister Lavrov in Russia as well today. She's talking tough as well. So it's ongoing. Obviously, in the background, we've got the Chinese Olympics. Is there a agreement that Putin and Xi have that he's not going to upset the Chinese Olympics by invading Ukraine? Will he invade Ukraine? 130,000 troops was the last count out and about near the Ukraine border. That's an awful lot of personnel. But at the moment, they're still in the Russian territory. So it's saber rattling, lots of issues. Obviously, the energy crisis in Europe would escalate significantly. Biden has said, that Nord Stream 2 won't happen if they move any further forward. So it's all that diplomatic pressure. The Russians are saying they haven't got the guarantees. Why is NATO moving further east? The West are saying Ukraine's an independent country. It's politics always affects the markets. But anyway, low volume this week. Anyone was waiting for the US news, so we are going to see. Well, this is the news, Tulu, and it's moved. If you've been waiting all week, you can see what the markets think thus far in the first 45 minutes of that news coming out. That's dollar strength on that news. So dollar bid. Let me just have a look at the dollar index. Should have shot. There we go. Through that 95.75 we talked about at the beginning of the session today, and 8 points or 8 points away from the key next big resistance of 96 for the dollar index. So certainly it's a dollar bid day on the news of 7.5% for annualized inflation out of the United States. Surprise to the upside. So let's have a look at dollar CAD. We haven't looked at oil, have we, Tulu? You're right. Let's have a look at oil. Oil remains relatively bid. This is US oil on the 1 hour time frame, but obviously a stronger dollar. Remember, all commodities are priced in dollars, so dollar strength will affect all commodities. So we're down. Interestingly, we've tested down to the 200-hour moving average, which you do in times of stress. We did here on what's that? The beginning. When was that? The 8th of February here. The 9th of February, and here today we've done it here on the 10th of February. So the last 3 days we've tested our 200-hour moving average. Unsurprisingly, we did it today, 87.80, and again another one on this 1 hour time rate, now rolling over from a move up. But if we look at gets a bit messy my daily chart here. There's lots and lots of lines on it, so excuse me for that. But as you can see, that's still bid, and it's consolidating at relative highs. The 20-day moving average sits down all the way down there at 85.41. So $85, another big psychological support area for oil, and we're way above that in the moment, obviously. So 85.41, first big support area, but above that we are consolidating in the $90, 88 range. So far, so $2-3. We went to 91, didn't we, yesterday? You got 91. Was it yesterday? No, it was earlier in the week when we got up to $91. And again, sort of moving up a bit from Tuesday, higher highs, higher lows, but coming down to test that. So that's our support today on oil to the downside. So dollar CAD you asked about, Tulu. I've sort of got diverted by the oil market. Dollar CAD, that's what dollar CAD's done. Unsurprisingly, we've bounced quite significantly, so back over 127. We've been moving down all week for CAD traders. Let's move that. And playing with our 200 hour moving average all week as well. Now we're back over it. So 127 is now our support area for this holds, and the 200 hour moving average at 126.96 intraday. Our low from yesterday, our low today is around about that 126.65 level. You could take that for the, the low of the week was down about there, wasn't it? That's so post NFP we went all the way down to 126.56. Remember we had weak Canadian data as well last week, weak jobs data, which is why we had a stronger, a weaker dollar CAD following non-farm payroll. But obviously we've got the political issues in Ottawa as well. We've got this truckers' strike as well. Won't be helping outlook and sentiment around Canada and the Canadian dollar at the moment. But certainly 126.60 is the support. Way above that now is that 126.70 and the 127 round number. So to move higher for the rest of the week, we'd like to break that resistance from Tuesday at 127.15, which we're testing at the moment. So there's our resistance to going forward this week. Sorry, let me move that up. That's where you want to close. So on an hourly basis, since Tuesday, we haven't been over 127.15. Monday, that's Tuesday. Yeah, Monday was the decline, wasn't it? After the rally on Friday, the non-farm payroll. So we went to 120. I said that the wrong way around, didn't I? The dollar improved on Friday, and it's weakened since then, but we moved up. So that's our first target, 127.15, then 127.40, and then 127.75 from Friday's non-farm payroll. Well, that looks a bit of a stretch from here on the intraday basis. 4-hour basis, again, see we support the 200-hour and moving up to Friday's high here, 127.75, and the daily time frame, much more of a range, much more of a consolidation range. So last week we went all the way up here to test within a few pips of 128, and then it's moved down. So this on a daily time frame, we're now above key support. So we see how the 20-day moving average is flattened now. So that becomes a key end of day support for what's that? 1, 2, 3, 4, 5, 6, 7, 8 days. 126.64. That's a key daily support as well. That's where the 220-day moving average sits. But we need to break 127 and quite significantly. So 127.15 is where that first blue line is, we said. And there's our, daily targets to the upside. But again, capped at 128 to the upside for dollar CAD. Obviously, both those currencies quite driven by the oil market as well. Zeno, gold. Let's go back to gold. Gold down day today so far on that news. Not surprised. 4-hour has rolled over into our next candle, so that's still down, and our 1-hour which remain negative as well. Huge volatility on the. I don't know how many of you have been caught out on that, but there's a massive spike to the upside, massive spike to the downside. That's what news could do, I'm afraid, ladies and gentlemen. I hope you caught the right side of that move. I don't think you can see that on that black. Right, let me just change the background quickly. We'll lose things briefly, but I'll just show you the size of the candle. There we go. I'll complete the background, but that was a huge, too bright for me, that whiteness, but a huge spike down on for the 1 hour of when the data came out. So I hope you didn't get caught the wrong side of that, my friend, or you got some of the upside, some of the downside as well in the intra-hour. But certainly, let's go back to my black background so I can see things better. Okay, but yeah, big spike. I say you can't really see that on the black chart there, but again, it's moving lower. We're under the key 130 now. We're currently trading 1827.70, which is the last time we looked at the chart a few minutes ago, was key because that's and the one above that was this 129.60, which is the 50-hour moving average. Excuse me. So Zeno, Ogbar Zeno, sorry. where it's biased to the downside certainly. And again, there's not much support below that. If we zoom this in, this is the 1 hour time frame, as you can see from yesterday. Let's put in yesterday's low. It's below the 50 hour, and that comes in here at 124.58. Sort of, you know, our trend line is the resistance to the upside. So we're under the 50 hour moving average at the moment. We're under that blue line quite significantly. So that's the next intra-hour spike here, 124.60. The end of hour basis from yesterday is really this sort of level, isn't it? From early yesterday morning, 125.25. Okay, so that's our next support area to the downside in the hourly time frame. For gold, Zubaru, would the current direction hold or continue for the dollar? Well, it's moved. If you're talking about the dollar itself, the dollar index here, you can see on the this is the 4 hour chart. You know, if we just look at the move it's had. This is the 15-minute chart. The impact of the inflation and the initial claims broken out very, very significantly. So that's held up, and that will have followed through to the 30-minute time frame, the 1 hour candle. The first hour of the post data is complete. Remember, the data came out halfway through this candle, so big blowout candle. That first target of 95.75 has been hit, and again now we've come within 2 pips of 96. Whether we get to 96 today or not, who knows? But you know, we came down very, very quickly on Thursday ahead of non-farm payroll. We spiked up on non-farm. This is obviously the strength. Remember what the dollar index is showing us, though. This is it's a weighted index of 6 peer currencies. The biggest one of the 6 in the weighting is the euro. So we've had a very strong euro post ECB last Thursday, which is what this move was here. Then we had NFP, which is positive for the dollar on Friday, and then we've just been sideways to the next big data point, which has been the inflation today, particularly the inflation. The initial claims has also helped, so a big blowout over at 95.75. Next test is 96 itself. So yeah, dollar is looking pretty okay on this. On a daily basis, again, it's been edging up all week from the move down on Thursday because of the ECB. So again, as an end of day basis for the dollar, you can see, you know, it's not, that's a key support area on an end of day basis going up. So 96 a key level to the upside. Again, you could extend that back from there. So that down leg is looking to break, and again on an end of day basis, we're now looking to cross the 5 and 90 EMA and over the 20-day moving average. So the 20-day moving average is at 95.85. So a significant close above 95.85 will be a significant day for the dollar index on an end of day basis. Zubaru, okay. Can you repeat euro dollar? I didn't quite get that. Of course, I can, Quasi. What are we talking about? What was it? Was it Quasi you were asking about 4 hour? I can't remember. Quasi, yeah, euro. No, was asking about euro on the 4 hour. Quasi, what's Quasi gone? Pound yen, Quasi. Pound yen, Quasi. Quasi. I can't see your euro. But let's go back to the euro. Basically, if you've been here any length, which you have, Quasi, you've been here for a while, you can see that it's been a positive dollar data move. Okay, we had a very positive euro from last Thursday because of Margaret Thatcher. Not Margaret Thatcher, because of Miss Christine Lagarde and the ECB. So that's been positive all week. In the mix was non-farm payroll, which benefited the dollar, and now we've got inflation this week, which benefit the dollar. So the bias is a dollar positive here, certainly today. So again, I don't know how long you've been. I don't know what time frame you're trading this, but we've been moving up from from Tuesday's low here, where we tested under 114. Huge move down on the news. Tested, went all the way down to where we currently trade at the moment, 113.80 in the last hour, under 113. We closed above 114, which looked okay, but big engulfing candle. So it's definitely biased lower today, whether we run out of steam going lower, but a close under one, let me just say this, a close under 114 would be negative for euro dollar today on an end of day basis. Why do I say that? Well, let's look at the daily time frame, because that's a big fat line in the sand. Look, there's our 114, the big yellow line there. Hope you can see that. So we spiked up over it for a few days in the middle of January. We spiked up over it more days, admittedly, in February. 1, 2, 3, 4, 5, 6 days. It was only 3, 4 days in January. So, yeah. But after that, we moved all the way down to the 1125 zone towards the end of January. Pivot bottom, and then we've rallied very significantly. Huge rally up on Thursday, thanks to Mrs. Lagarde. Topped out at 114.85, and we've been down ever since. So a close under 114 today is significant. On an end of day basis, because of this this U-shaped move we've had, our moving average has done the same thing from being flat here most of December. We dipped down, dipped up. So our 20-day moving average now sits at 113.50. So 113.50 is the next big support level if this candle breaks the 114 level on an end of day basis, for an end of day basis. So as we go down the time frames, the 4-hour target rallied up here on the Thursday, sideways all week, down now. So that's triggered low, as I said to somebody earlier who was asking about the euro dollar on the 4-hour. This candle currently, obviously, is far from complete. We've still got 3.5 hours on, so we can't make any decisions on that. But that was our first trigger to go low on this 4-hour time frame, and the 1-hour time frame, even more exaggerated, as you can see, breached that trend line from Tuesday's bottom through the 114, and we're currently trading at 113.80. And you can see, if we zoom this in, you can see what a big shakeout of the week it's been, and we went up very aggressively thanks to Miss Lagarde. It still should hold some of that, but 113.64 here is the next hourly candle. See, it's the top of that candle, the big news break. So that's our that's the next target to the downside. So 113.82 at the moment. Next support 113.64 on a candle basis. Okay, Quasi, I hope you got that. I know I speak too quickly, but there's lots of people asking stuff all the time, so just bear with me. If you want me to repeat it, please ask, my friend. Future pound Aussie, another one that moves. The pound Aussie, pound Kiwi, big pip moves. You've got to be careful though, guys. And remember now, you know, Aussies, you know, their markets obviously closed. A lot of them will be asleep now. Well, should be asleep now. So there's not many, you know, Australian. Well, there's no Australian banks, so but obviously people still trade this this pair. And obviously pound is, you know, the full force of the English trading day, the London trading day. I don't know. I've got pound Aussie here. Let's have a look. Let's have a look. Where's my pound? Where's my pound? So it's the same set, it's different. Pound Oz. So what's happened? Well, pounds benefited from that. Oh God, my brain's going. The pound's benefited from the, or the pound Oz has benefited from the US data. And we say, why do we say that? Sorry, I see dust on top of my camera. That's really annoying me. There we go. It's part of my OCD, I think. I see dust collecting on top of the camera. Sorry, future, what was I saying? Yeah, so again, another one. It's been, you know, a nice, lovely trend all week to the downside. This is the 1 hour on the pound Oz. So here, so Thursday, Wednesday, Tuesday, Monday, Friday, NFP went all the way to 191, and here we are this morning. We were all the way down here at where was it yesterday? There's 188, so 188.50. So huge trend down. The floor was found here at 188.40 yesterday. Bounced off. It couldn't get over the 20-hour moving average. Let's bring it into today. Down to again to this 188.37 or 188.40 for the sake of round numbers, or 188.35. Let's move it. Yeah, there's a round number. There's my next 5. 188.35, and it's moved up and then stalled. It's moved up and moved back down. So The trend down, one would argue, may have ended. It's too early, perhaps a bit too early to tell, but that's your big support, 188.35. So any long, you'd want your stop loss down below that. So for instance, if you'd taken that long on this break of this 189, that's your, you're looking to what's that giving you? That's giving you 700 points. So 700 points takes you to about 1-to-1, takes you to about here. Where does that take me? Well, back to there. Yeah, so that's a reasonable sort of target level on the trend down this week. But we've gone up and then we've immediately turned lower. Interestingly, there's still half an hour to go, so it'll be interesting to see how that fades. It sort of gobbled it up. Yeah, it's still, yeah. So that's a reaction. The 4 hour is still weak. The 4 hour needs to break. Well, these need to, the 5 and the 9 EMA on the 4 hour is still pointing down, I should say. The 20 period moving average on the 4 hour sits at 189.35. So that needs to move up there. And the daily, so the 4 hour is still negative. The daily is still negative, having just gone negative officially, really, yesterday on that down move. So we remain to the downside, 188.35 and then 188.00 to the downside. Somebody's asking to speak to me. One of my colleagues in Pakistan. Adnan, I'm still live on Facebook, my friend. I will speak to you afterwards. In fact, I know there's somebody I need to speak to first, so I'll speak to you after I've spoken to them. So 188 to the downside. So the daily still negative. Let's just do this for you. Sorry, future. The 4 hour is still negative because it's still in that downtrend, and the 1 hour looked like it was perking up, having flattened out here. Got that support, this 88.35, but it's rolled round at the moment. So a tentative long on that strong candle here, I would say. But again, as you can see, the MACD signal is starting to rise. The histograms are getting short lines are getting short. RSI is rising out of the oversold area from this morning, but it's rised and then it's moved back down, but it's back into the neutral area at 45. So interesting where it goes from here. That that mightn't work out. We now testing to the downside, but 88.35 is the key line in the sand for me there, and 89 is the 189.00 is obviously the resistance it ran to and then bounced off. So that's the range pound Oz is in going forward. Future. I hope that's answered your question, and this looks like that was the last one. Indeed, it is by the looks of things. Let me just check my colleagues over on Facebook. I think all the Facebook ones came in, didn't they? Because I've seen Facebook questions. So I don't need to go and check that, see if there's any others. I'm sure there aren't. So we're 7 minutes into the cash session. We'll have a look how the equity markets have started. One would expect the equity markets to have weakened because of the strong CPI, strong CPI numbers and the good jobs numbers out of the United States. So you'd expect, well, futures, as we saw earlier, had been weak. We'd expect them to get clobbered a wee bit. So I'm going to have a quick look at the equity opening markets, guys, and then I'm going to call it a day, unless somebody wants some more other things we want to have a look at. So final call for final questions, basically. So let's have a look at how the cash markets have opened. So they've opened lower. It doesn't surprise me. Let's have a look at the where are we? Let's go back to my default trade. So let's have a look at the S&P 500 and NASDAQ, which we looked at earlier. So let's have a look. So NASDAQ here at 5 minutes. Yeah, we've been moving lower all day. This is the futures. So the actual open sort of bounced a wee bit high, but the cash will be weaker. This is the NASDAQ on the 5 minutes. So it's got support, well, not support, but 1470. 14,745 is the floor here on this 5 minute, so it's ticked up a wee bit, but cash market will be weak. If we look to the hourly, yeah, so that big shakeout. So that's why we're finding support. 14,800 is where our 200 hour is. So it's a weak start to the major indices, with the Nasdaq obviously leading that move down. If we look at that, compare that to the Dow's similar move down. This is the Dow this is spot Dow market, obviously the CFD market before the cash markets opened. Top this morning on the opening at 35,845 and down again now. So big trigger lower, 35,627. I don't know why that's in there. It's obviously in there for a reason. I can't see it immediately why that's in there. And then the day number. I'm not sure why that's in there. 35,000. It must be from some time ago. Let's have a look at what that's all about. Doesn't say. Is that the? Yeah, let's put that. Might be just one of those spurious lines that ends up on your chart. You don't know why. Anyway, 35,845 has been our high this morning, and obviously we rallied quite significantly yesterday. Dow was up over 1% yesterday and the day before. Strong day, but shaking that out now. Now the data's out, so a weak start for US cash session. There's not any. There's another speech today. I can't remember. No, it's a 30-year bond auction. Yesterday's 10-year bond auction went at 190.00, so very, very high. Last time it was 172. Time before that it was 150. So big rally in the 10-year bond auction in the United States out of the US government. So very significant moves there, as we talked about before. Yeah, I was trying to say, yeah, no, that was just the one at Macklin's speech. I don't think there is. No, there's no more major news today. 30-year bond auction in 2.5 hours. I thought there was another central bank had a speech today. Was it? Oh, it's tomorrow. It's overnight. Yeah, Low of the RBA has a speech overnight. Japan's closed tomorrow. It's really UK is the top of the shop tomorrow. UK data includes construction and industrial production, manufacturing production, so a whole raft of manufacturing data. We've got German inflation, final reading of German inflation, and the monthly UK GDP. In fact, it's the quarterly one tomorrow, so it's quarterly GDP. So that's probably the significant data tomorrow. UK GDP. Also overnight, we've got inflation, quarterly inflation expectations from New Zealand, 2.96%, way below. Remember that's 7.5% annualized number for the United States. That's a quarterly number though, out the for the New Zealand. So see what that looks like. Why is that? It's due to source rescheduling, shifted 2 days late, so it's late data out of New Zealand for their inflation numbers. Tomorrow, where was it? I was back here. There's no more questions about it. Let me just refresh that. There's nothing on. Some more questions on. Can't see gold. Can you repeat euro? We did that. Amaze euro. No more questions on from Facebook. Oh, looks like that's dried up as well. No more questions from my friends here on YouTube. So I'm going to call it a day, guys. Hope you're staying safe. Last one was we did the euro, didn't we? And future was the last one, wasn't it? On pound yen. So equities are lower. We're finished with the euro. It's a strong dollar day thus far. Euro needs to hold 114. Key line in the sand, and then 113.64 here on this 1 hour chart. I'll just recap the numbers. US inflation came in hotter than expected. Let me just bring it up. Yeah. US inflation came in hotter than expected. The inflation numbers are down here. So the month-on-month number was expected to slip to 0.5 or 1% from 0.6 to 1%. It didn't. It was higher by the one ticket, stayed higher. The year-on-year headline number, the one that's grabbing all the headlines, has gone up from 7% to 7.5%. It's 2 ticks higher than expectations at 7.3%, and the core number has finally got to 6 as well. So that's gone up has gone up 0.5% as well, 0.5%, from 5.5% to 6% year-on-year in Germany in January. And the other key data for the US economy was the initial weekly jobs claims, back down again for the first time in 3 or 4 weeks, I think. 223,000, beating expectations of 230,000. Last week's was revised a tick higher, 1,000 higher, 239,000. So we're back down. The continuing claims was a bit worse than expected. In fact, 100,000 worse than expected at 1.62 million from 1.615 million. And the 4-week average is now down again another 2,000 to 253,500. So overall, it's hot inflation. It's a strong suggestion of the jobs market in the United States. So it's all positive data for the Fed to move perhaps faster and higher than the market thus priced in thus far. Hence, a stronger dollar, a weaker stock market, and yields moving as well today. So take care, everyone. That's all for today. Join me tomorrow. We'll be looking at an end of week wrap, obviously mostly recapping what we've done today. See what that UK data's like tomorrow, and stay safe, everyone. All the very best. Take care.